Alright, ladies and gents, welcome back to the channel. Let's face it, running a business or building a property portfolio in the UK today requires more than just generating income. It takes a completely different mindset to protect the wealth you've already built, because making money is one thing. Keeping it, protecting it, ensuring it holds value long term, that's a whole other game. We're not really conditioned to think this way in the UK. Most of the focus is on growth, adding more properties, increasing turnover, scaling faster. That's the game we're taught to play, but at some point, the conversation needs to change. It stops being about how to make more and starts being about how to keep what you've built. That's where wealth preservation comes in, and it's one of the most under-discussed pillars of long-term success in property and business. And that's the stage I want to explore in this video, because when it comes to protecting your wealth, few assets match the simplicity, security, and long-term resilience of physical gold and silver. Now let's make something clear. I'm not talking about speculating on metal prices. I'm not telling you to sell everything to go all in on bullion. And I'm certainly not saying that gold and silver are a replacement for income producing assets. What I am saying is this: physical precious metals can play a critical role in your overall financial strategy, particularly if you're sitting on retained profits or cash reserves that aren't being deployed right away. If you're a UK property investor, you've likely released capital from a refinance at one point or another. If you're a business owner, you may be sitting on company profits that you don't want to draw down for tax reasons. So where does that capital go? You could leave it in the bank, but let's be honest, in a high inflation environment, that's a slow erosion of value. Inflation might be cooling on paper, but the cost of living, the price of services, even construction costs, they're still all climbing. Your pound today doesn't buy what it did 5 years ago, and that erosion is real. So you look at alternatives. Equities, yes, but volatile. Crypto, high risk, unpredictable, and often poorly understood. Funds, well, they lock up your capital and come with a range of management and liquidity risks. Gold and silver, on the other hand, are simple, tangible, historical. They've been recognized globally as stores of value for thousands of years. They don't rely on the solvency of a third party. They don't require a yield to justify their existence, and they don't go to zero. And it's that last part that matters. Most people don't understand how valuable it is to hold something that simply doesn't go to zero. Gold has been through world wars, currency collapses, economic depressions, and more. It still holds value because it is value. Let's bring it closer to home. In the UK, if you run a limited company, your business can buy and hold physical gold or silver as part of its assets. This isn't a loophole. This is entirely legitimate, recognized asset management. You can purchase bars or coins, have them stored in a professional vault in your company's name, and they sit on your balance sheet as tangible physical assets. For many business owners, this is a far smarter option than keeping large sums of retained profits in cash. It's still liquid. You can sell physical metals quickly through the right dealers or vault providers, but it's also outside the mainstream banking system, and that separation gives you resilience. There's also the pension angle. Many of you already use SAS or SIP pensions to gain control over your retirement pots. These pension structures allow you to invest in commercial property, make loans to your business, and yes, hold physical gold. HMRC approved bars can be held inside a pension, giving you tax efficient exposure to a non-correlated asset. No capital gain tax, no corporation tax, just long-term protection. This is the essence of smart asset management. It's not just about growth, it's about building a financial foundation that's durable. One that gives you options, flexibility, and protection no matter what happens in the economy. Because let's be honest, we are living in uncertain times. We've had the pandemic, we've had war in Europe, we've had record inflation, we've had rising interest rates. Nobody really knows what's coming next. And while property remains a powerful strategy for long-term wealth, it's not always liquid. You can't just sell one unit tomorrow morning to pay for an emergency. But gold, you can sell what you need and move on. Now, let's address the objection. Gold doesn't produce income, and yeah, that's true. But not every asset in your portfolio should. You don't expect your emergency cash reserve to pay you a return. Its job is to be stable and accessible. Gold is similar, but with an added benefit. It often increases in value during times of uncertainty. It tends to move inversely to currencies and stock markets. So instead of sitting on cash that's losing value, you're holding something that's holding firm, or in many cases, appreciating. Some people think buying gold means buying paper, ETFs, funds, synthetic trackers. That's not what we're talking about. The real strength of this strategy lies in physical metals, coins and bars you actually own. No counterparty risks, no reliance on the fund manager doing the right thing, just real allocated bullion, stored in your name or a company's name, securely vaulted and fully insured. It gives you control, and control is everything. In business, in property, in wealth, the more control you have over your assets, the more power you retain. And you also don't have to go big. Many investors start with small allocations, 5%, 10%, maybe 15% of their liquid capital, and build from there. If you can purchase gradually over time, creating an average entry price, just like you would with property or shares, the key is consistency and intentionality. This isn't about panic, it's not about fear, it's about stewardship. It's about recognizing that your capital, your retained profits, your equity, they deserve to be protected, not parked, not eroded, protected. And that's the role of gold and silver. They're not flashy, they're not the next big thing, but they're stable, they're real. They've stood the test of time, and if you're playing the long game, and most business owners and serious property investors are, then they absolutely deserve a place in your strategy. The mindset shift here is simple but powerful. You don't need to be always buying more to grow. Sometimes the smartest move is to manage what you already have more effectively. Asset management isn't just for hedge funds and institutions. It's what you do as a business owner, as a director, as a steward of capital to ensure your wealth grows securely over time. And sometimes the quietest assets, the ones that don't make noise, don't promise the world, don't swing wildly up and down, are the ones that carry you through the storm. So here's the question to ask yourself. What are you doing to protect your company's wealth today? If the answer is not much, it might be time to explore physical precious metals. Not instead of property, not instead of your business, but alongside them as the ballast that keeps everything stable. Because protecting your wealth shouldn't be left to chance. It should be deliberate, strategic, and grounded in assets that actually endure. As always, thank you for watching. I appreciate you for being a subscriber. I'll see you again on the next one.